Price is approaching an inflection point that can set the pace for the coming sessions. The risks to the downside is always present, but with the current volatility versus momentum signature, things may be going against the short bias traders. Let's go ahead and open up these charts and see what's under the hood. Welcome back to the channel on this happy Saturday. This is ARCa. Let's dive into ticker symbol ASRE. What is up, you guys? Thank you so much for stopping by once again. Let's go ahead and dive in to ticker symbol ASRE, and we're going to go ahead and go over the mathematical model first, right? We're going to go over the statistics. And luckily enough, I have actually organized the session so that it's not so convoluted and so that it's easier for you to understand what I am presently doing, right? So the backtest is consistent of a profile that is volatility, represented by the BBWP indicator, versus momentum, represented by stochastic momentum, using a 14-day simple moving average versus a 3-day exponential moving average. Okay, so anytime, so let me go ahead and pull up. Yeah, let me go ahead and pull up the sample set, right? So this is the entire backtest, right, of the 5-day time frame. And anytime that volatility has contracted into the critical contraction zone, which could be considered within the 15th percentile of contraction, and started an expansion phase, particularly beyond the 15% line, using both the moving average and the volatility component represented by the spectrum line, moving average is the white line, that paired with stochastic momentum with an upside pivot, I have taken note of every iteration where that has happened throughout the entire trading history of ASRE on the 5-day chart. So that has led to this data set. Okay, so that actually has given us 7 total iterations, of which 7 have been correctly guessed towards the upside. That gives us a 100% upside accuracy for now. Of course, we don't have that many iterations, right? But as time moves on, this will start to deviate and it'll start to actually kind of naturalize, right? So as things would, using repetition and frequency, right? So now the average upside thrust, or AKA your mean, is a massive 435.88% to the upside. And the average duration to complete such a move would be on average 21.14 days. Okay, so now I have calculated the standard deviation calculation for this. Okay, now based off of this 435% upside, we have a standard deviation that is a massive 875.17% to the upside, right? And now the upper bound of the first standard deviation being this zone here, the standard deviation area would be 68% of the performers, which would be around the center of the triangle, and your lower bound performers would be on this side. Now, the negative read on the lower bound performers renders that metric useless. Okay, so we actually need the metric to be positive in order for us to evaluate it or correctly use it within statistical backtest. Now, yes, I do have some curiosity over all of the targets. You know, first of all, the 435.88% is we're approaching that soon. Right, so let me go ahead and get rid of the sample set now that we know what that all is. And I'm going to go ahead and pull up the key levels now. Okay, so let's also keep together this the data here. Okay, so 435.8%, right? That leads to a target right over here, 435%. That leads to a target that's about 50 cents, 50.44, which is approximately another 17% gainer from where we are right now at 44.90. And it is, you know me, I like to make things, I like to tighten things up within a range. I don't like to just look at one solid value, as you know, it's best for us to look at it that way anyway. So the range that I'm looking at for the immediate short-term time frame is at least 47.10 to 50.44, which would mark off the completion of the 435 spot 88% move to the upside. Now, if we were to observe the 875% of the regular performers of the standard deviation, meaning 68% of the results, that leads to a target of around 92 cents. And the target bound or the target range would be 80.91 to 91.79, which is confluent to the 2-spot 272 geometrical level. Now, here in the mean or the average upside thrust, it is confluent with the 1-spot 618, which is traditionally a pretty notable Fibonacci retracement level. Psychological, if you will, geometric by nature. And that's absolutely something that the trade likes to revolve around. In fact, life itself likes to revolve around itself. No pun intended, revolve around, right? It likes to revolve around the 1-spot 618. If you are familiar with what I'm speaking of course. Okay, so now the more curious thing that's actually I guess what's piquing my interest here is not so much these targets. I can see these targets definitely being reached, or with higher probability being reached, if I can say that. I'll replace the word definitely, right? Yeah. The target that's really curious for now, to me, is actually the upper bound of the first standard deviation being a 1,300% move to the upside. Now, where the signal fired is actually down here at the opening of this candle, because that's exactly when we started to push beyond the 15th percentile of volatility. So at that area there, the 5-day candle here fired off the signal, and we started an upside momentum, and that's where the statistics started to show as we could apply them there, right? So now, yeah, that target is leading, that 1,300% move to the upside is leading to the other 618 target. So that would be the 2-spot 618 at $1.31. Naturally, I have to make an upside range on this so you can see exactly what I mean. It is confluent to several other resistances, historically speaking, right? So that's why I have this target there, the range. And that range in total is 131 to 167. Okay, so this is essentially what the statistics are stating here. Now remember that these are statistics; they are not certainties. We must Elon. No. I was going to say that we must honor our risk management, right? We must try to protect our gains as we move up. Never give back to the markets what you've already gained. Okay, so with that said, let's go ahead and take a look at some correlation here. So this is the annual Gaussian band. We're talking about 1-year candles here, okay? So I like that we're on our way up, right? We've recovered several areas of inflection, and we have combated them successfully. We are reaching a very important level here, of which, of course, is going to sound familiar to you. The top side of this candle here is 50 cents. And the 435% of the average performers, I'm talking about your mean, is landing at 50.44. Nice. And also the bottom side of this candle here, that is 50 cents. And the lower bound of this wick here is also 50 cents. And you can determine everything by using the OHLC up here, the open, high, low, close value. Okay, so now the upside here is very curious because of the target where the mean is located of the Gaussian bands. Okay, so please, I'm just going to go ahead and put it like this so that you are aware over where that is. Okay, so please notice here that in an annual chart, 153 is starting to show us high relevance. Now, why does that sound familiar? Well, that's because it matches our 2-spot 618 to the $1.67 range, aka your upper bound of the first standard deviation of 1,300%. So that is rhyming with that geometric level as well in an annual chart. Okay, so that's I like to see things like this. I definitely feel like there could be an upside coming in, and it is of higher probability. clearly, statistically, literally. All right, so now observing the on-balance volume, please notice here that on the weekly time frame, retail, of course, has had its little blips here and there, but overall, this is a continued. This is continued acquiring of the asset, right? We're still, like, nobody's really selling anything at all. This is continuing to the upside. We just got the weekly closure, and we're still continuing on that manner. Not even that is actually, you can definitely see it too with volume itself. You can see the clear behavior of our volume here. We have a very nice ascent here. Inclining volume, inclining price. That is bull strength. Next thing that you want to take a look at here is the accumulation distribution indicator. And please notice here that this is historically the most accumulation that we have done, and it is still pivoted straight to the upside and continuing. Okay, so these are very important metrics for us to determine whether the upside is still valid or not, and it apparently is. Okay, so just to give you the higher probabilities here. Now, one more thing that I wanted to talk to you about is, in fact, the ARQ algos, right? The ones that we actually just released as a pre-order. Definitely get in touch with us if you are interested in these. But please notice here that ARMOR itself printed a long signal right down here at the opening of this candle, 35.85. If we were to have followed the ARMOR strategy, then we would currently be up around 22.81%. Not bad. At the end of day on Friday, we would have been up around over 25%. So that's leading pretty nice, and it looks very accurate as far as its read. Okay, so let's move on to the next chart and see what other relevance we have for us. Oh, right, I actually needed to talk to you one more time about this, about the statistical backside. So I'm gonna just go ahead and focus on the stochastic momentum indicator. You can see here that it's on a little bit of consolidation, right? But if we can go ahead and kind of manipulate the look back period and the smoothing factor, then we could see where the early reflections are as far as the direction is concerned within stochastics. Let's go ahead and do that. D% equals your 3-day exponential moving average, and your smoothing factor, let's go ahead and put it to a 1, to a value of 1. Okay, so here's going to be a 1-day look back, 1-day smoothing factor, and please notice what's happening here. You see, now that we have everything as fast as we can read it, we can actually see that the true direction of stochastic momentum is in fact still pivoted towards the upside. The importance behind that is so that, let me go ahead and put this back. Okay, the importance behind that upside pivot is clearly for the data set to validate the continuation of our upper bound performers, of our completion of our average upside thrust, and even the direction into the standard deviation, right? So this is great. That's what I'm looking at. And now let's see. Another very important fact here is that we, on the 5-day time frame, please remember this, right? I'm sorry that the video is going a little bit long, but it is important. I do have high conviction in this play, and I do see an upside coming in relatively soon. I mean, we're long on this, like what, 20 cents, 18 cents, something like that. And we're currently way in the money right now, and still moving along, right? So now what you're looking at here is actually 2 drives of bullish divergence. One of them being of hidden variety, and the other one being of regular variety. Now, your hidden variety is actually when momentum is making a series of lower lows, and when price action is making a series of higher lows. Okay, your regular drive of bullish divergence is when you're making lower lows in price and you're making higher lows in your momentum. So in other words, your divergence drives or divergent drives is the opposition of price action versus momentum, and in this case, momentum represented by the RSI, Relative Strength Index. Okay, so that's how we are able to determine 2 drives or different variety confirmations and validations with a continuation to the upside. Please also notice that with an upside pivot on the RSI signal and an upside pivot on your SMA 14, your 14-day simple moving average, you are actually right, or ASRE is actually right at the gravitational zone of the bull weakness percentile within the RSI. So this is highly likely continuing on to the upside. And we shall observe in the coming session on Tuesday. Please remember market closure in observance of Labor Day. Okay, so what I wanted to point out here overall, just so that we can keep this nice and short, is that every single time frame RSI signal, if you notice here, are upside or either with an upside pivot and or above its SMA 14. When you are upside of your SMA 14, represented by that pink line, that represents a bullish crossover, okay? It doesn't mean continuation. It just means that it's a bullish crossover, and the odds tend to land within the bulls, okay? So, of course, any of what I'm saying here can be invalidated, and the price can literally rug pull right under us. This is why we have to manage our risk. We have to understand to be in sync with the markets, okay? So if we are moving with strength to the upside, that is an area for you to be able to, not financial advice, of course, right? That's when you can size up, right? Upon confirmations and validations of upsides and breaks of resistance levels of keys of key variety, right? Inflection points. Then we move our stop losses up. We can size up with strength. But when price action starts to diminish and starts to, decline against us, that would be an area for us to really grow apprehensive and understand that we could, and we definitely have the option to slow our losers down, so we can remove risk, right? Instead of averaging down when you're negative, remove the risk so you can slow your rate of loss. Okay, so I think this is a pretty good place to leave off. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence and everything will be cool, okay, team? But with that said, I wish you well a very, very good rest of your Labor Day weekend, and I will catch you at the bell on Tuesday. Adios. Yeah.